Part 1. What destroys a trader is not losses, but the small habits people underestimate. There is a question that very few traders dare to ask themselves seriously. Why do some people trade for 10, 15 years and still stay stuck in place, while others, after only a few years, enter a stable state? Not because the other person is smarter, not because they have some secret strategy, and not because the market favors them more. The difference lies in very small things, so small that most traders look down on them and ignore them. Most traders believe results come from big decisions. They believe that a new strategy, a more optimized system, one big winning trade, or one home run can change their life. So they spend most of their time hunting for leaps. But the market doesn't work that way. The market doesn't reward drama. It rewards small improvements, steady, repeated, over a long time. A trader doesn't collapse because of one losing trade. They collapse because every day they break discipline a little, each time they enter a bit earlier than the plan, each time they hold a losing position a bit longer than reason, and each time they justify their mistake just a bit more. Those little bits don't hurt immediately. They don't blow the account in a single day, but they silently accumulate. And one day, the trader looks back and sees the account hasn't grown. The belief is gone. Emotions have become fragile more than ever. Just like the body doesn't age overnight, a trader's psychology doesn't break in one trade. It breaks gradually because of habits too small to be noticed. Once, not journaling because you're busy. Once, skipping a rule because you think this setup looks good. Once, not stopping because you believe it has momentum. None of those things look dangerous, but over time, those small things shape how your brain reacts to risk, to losses, and to pressure. One of the most important principles that traders often ignore is, you don't need to become better immediately. You only need to not become worse each day. In trading, improving 1% a day is not in profit. It is in the fact that you place one trade less. You stop a few minutes earlier when your psychology starts to tilt. You don't hold and hope just because you're already in. And you write one more honest line in your journal, even if it makes you uncomfortable. A stable trader is not someone who trades brilliantly. They are someone who makes fewer mistakes than yesterday. They don't need to be right more. They only need to be wrong less. Less wrong in entry timing, less wrong in position size, less wrong in emotion, and less wrong in how they react after a loss. The paradox is, the smaller the improvement, the easier it is to sustain. The easier it is to sustain, the less psychological resistance you feel. And the less resistance, the more durable it becomes. The market doesn't require you to be perfect. It only requires you not to destroy yourself. Every day, a trader's real enemy is not the market, but the tiny permissions. Breaking the rules a little today is fine. This time can be an exception. I'm already in, so I'll just hold it. Every time you allow that, you teach your brain that discipline is negotiable. And once discipline is negotiable, in your highest pressure moments, your brain will always choose the easiest path. That's why so many traders know a lot, study a lot, watch countless videos, yet still repeat the same old loop. The problem is not knowledge. The problem is the habits formed in the smallest moments when no one sees, not even you. The market doesn't create who you are. It only amplifies what already exists inside you. If you lack patience, trading will reveal it. If you avoid mistakes, trading will force you to face them. Each session is not a place to make money, but a place to test whether today you will betray yourself or not. In trading, the ones who survive the longest are not the smartest. They are the ones who lie to themselves the least, who allow themselves to break discipline the least, and who are humble enough to fix very small things before they become a disaster. You don't need to become an exceptional trader. You only need to become a trader who no longer destroys himself. Trading is not a journey to chase profit. It is a journey to train the mind and fix habits. Tiny habits like stopping earlier, resting at the right time, journaling honestly, not making excuses won't create results immediately. But over the years, they create a calm trader with a foundation who survives long enough to win. Not because you're better, but because you no longer destroy yourself. Part 2. If you don't know why you trade, the market will lead you. Many traders enter the market for a reason that sounds reasonable. They say they trade for freedom, to make money, to escape their current job, to avoid living a controlled life. Those reasons aren't wrong, but they are shallow. And when the market starts testing you, that shallowness will show very clearly. When you lose several trades in a row, when your account moves sideways for months, when you open social media and see others showing off profits, money alone is not enough to keep you awake. Money creates motivation very fast, but it also makes you collapse very fast. Because when money is the only reason, each losing trade is not just losing money, it is losing meaning. And when meaning is threatened, your psychology starts to warp. Many traders don't realize they are trading in a state of being dragged by the market. They enter because they fear missing out. They hold because they don't want to admit they're wrong. They increase size because they want to prove they're still right. They are not truly trading. They are reacting. And when you only react, you are no longer in control of the game. A mature trader doesn't ask the market how much money it will give them today. They ask themselves a different question. Today, what am I trading to train? It could be discipline, the ability to wait, accepting losses without resistance, or clarity when things don't go your way. When the goal is internal, the market no longer has easy control over you. There is a truth very few traders want to face. If you don't know clearly why you trade, you will use trading to escape. Escape from life pressure, escape from feeling useless, escape from impatience with yourself, and anything used to escape will eventually turn around and betray you. The market is not a place to run from yourself. It is a place that exposes you. Failing traders often trade as if each session is an exam that decides their fate. Each trade is life or death. Each day without profit is a meaningless day. In that state, the brain cannot learn. It only tries to survive. And when the brain is only focused on survival, it will choose the most familiar behaviors even if those behaviors have hurt you before. Mature traders see the market differently. They treat each session like a training session, not to prove anything, not to be above anyone, only to train themselves. Some days they train well, some days they train badly, but every session has value if you can keep honesty with yourself. When you trade with a purpose deep enough, you stop rushing. You no longer need to enter a trade no matter what. You don't need the market to confirm that you're good, and you don't need to make it back to feel valuable. You begin to understand stability doesn't come from how much you make, but from whether you can keep your composure. Some traders are very intelligent, very sharp, but still cannot go far. Not because they lack knowledge, but because they can't tolerate the emptiness when the market doesn't give them emotion. When there's no volatility, they feel restless. When there's no trade, they feel useless. And because they can't endure that silence, they create mistakes just to feel alive. A trader with a clear purpose is different. They don't need the market to always give them feelings. They accept that most of trading is boring, waiting, doing nothing, and they understand the ability to endure that boredom is the real edge. When you no longer trade only for money, you begin to trade to understand yourself. You see clearly where you are afraid, where you are greedy, where you are impatient. You no longer try to hide those weaknesses, but learn to observe them. And when you observe long enough, old reflexes begin to weaken. The market is always uncertain. It doesn't promise. It doesn't comfort. It isn't fair in the way humans hope. If you enter it only with the expectation of being rewarded, you will always be disappointed. But if you enter it as a long-term training process where each day has something to learn about yourself, you won't be thrown off by short-term swings. A trader without a clear purpose lets the market decide their emotions. A trader with a clear purpose does the opposite. They let their purpose decide how they respond to the market, and that reversal changes everything. At some point, the most important question is no longer how much you made today. It is, did you stay clear-minded today? Did you respect your limits? Were you honest about your small mistakes? If the answer is yes, then even if the account hasn't grown yet, you are still moving in the right direction. Trading doesn't grant you freedom. It forces you to be mature enough to deserve freedom, and that maturity begins with knowing clearly why you are here. Part 3. Knowing when to stop before. Greed speaks. There is a habit that destroys accounts faster than a bad strategy. It's not entering the wrong trade. It's not misreading the market. It is not knowing when to stop. Many traders lose not because they trade badly, but because they refuse to leave the desk when they should. They don't stop after reaching enough profit for the day. They don't stop when the mind starts to tire. They don't stop after winning several trades in a row. And they don't stop after losing repeatedly. In their head, there's always a familiar whisper, just one more trade. And that sentence is where everything starts slipping out of control. When a trader wins repeatedly, confidence rises fast. But that is not clarity. That is dopamine blurring risk judgment. When a trader loses repeatedly, stress and frustration accumulate. But that is not reason either. That is cortisol pushing the brain into defense mode. In both cases, the trader is no longer fully themselves. They still watch the chart, still click the mouse, but the one making decisions is no longer the part of the brain that thinks long-term. A mature trader understands. The human brain is not designed to endure constant stimulation. Every entry, every fluctuation, every profit or loss consumes mental energy. As that energy drains, decision quality declines. The problem is traders often don't recognize that moment. They only realize it after they've gone too far. Knowing when to stop is not weakness. Knowing when to stop is respecting your nervous system's limits. Stop while you're still clear. Stop while you still have discipline. Stop while you're still you. Not stop only when the account is broken or emotions are completely out of control. Many traders think trading is an endurance contest. Who sits longer, who handles pressure better, who trades more wins. But trading doesn't reward stubbornness. It rewards those who can preserve themselves, preserve energy, preserve clarity, preserve the ability to see the market with normal eyes, not distorted by emotion. Some days, the market gives you clear opportunities. Some days, it doesn't. Inexperienced traders try to squeeze profits from days with nothing to squeeze. Mature traders are different. They accept. Some days, not losing is already winning. And they have the courage to shut down when they realize today's market no longer fits their state. One of the most dangerous moments is right after you've won well. Your brain easily confuses short-term luck with skill. You start to feel you can read the market. You believe you should ride the momentum. But in reality, your self-control is already declining. And if you don't stop, you will soon give back to the market what you just received. The second dangerous moment is after a losing streak. Then your brain is no longer searching for good opportunities. It searches for relief. You don't enter to make money, but to erase discomfort. In that state, each trade is no longer a strategic decision, but an emotional reflex. And reflexes are never sustainable. Knowing when to stop is a skill that must be trained seriously, just like entries. It requires you to recognize early signals. When your head feels heavy. When your eyes can't focus. When you start looking for reasons to enter instead of waiting for clear setups. Those signals are subtle, but if you ignore them, they will lead you to mistakes that are very obvious. Professional traders aren't superior because they have no greed or no fear. They're superior because they notice early when greed or fear starts driving, and right then, they stop. They don't argue with emotions. They don't try to look strong. They leave the desk and preserve the most important thing. The ability to make good decisions in the days ahead. Trading is not where you drain yourself dry. It is where you must learn restraint. Restraint in size. Restraint in number of trades. Restraint in time in front of the screen. When you stop at the right time, you don't just protect your account, you protect your mind. And an intact mind is always the greatest edge in a long-term game. At a certain stage, a mature trader no longer asks, "How much more can I make today?" They ask, "If I continue, will I still keep my clarity?" And many times, the honest answer is no. So they stop. Not out of fear, but because they understand. Stopping at the right time is itself a high-quality trading decision. Part 4. Failure doesn't destroy you. How you hide it is what kills you. No trader goes far enough without breaking at some point. No one is an exception. Some break after a streak of losses. Some break after one stupid decision in a moment of lost control. Some break after a serious discipline violation and pay a very expensive price. Failure is unavoidable in trading, but what determines whether you can continue is not whether you break it, is how you face that crack. A natural reflex for many traders when they fail is to hide. Hide in the journal by writing vaguely. Hide from themselves by blaming the market. Hide by switching strategies quickly, as if not looking at the mistake will make it disappear. Some even hide by trading more, trading bigger, as if constant action could blur shame and disappointment. But mistakes don't disappear when you hide them. They only sink, and when they return stronger. A mistake you don't look at becomes a habit. A habit you don't fix becomes a personality. And when that personality enters the market, it gets amplified mercilessly. A weak trader is not a trader who makes mistakes. A weak trader is a trader who doesn't dare to admit their mistakes fully. They fear the truth because it hurts the ego. They fear writing down what they did wrong because it forces them to see the real version of themselves. But trading doesn't allow you to keep a beautiful self-image forever. It forces you to face the real you, including the parts you don't like. A mature trader does the opposite. When they break, they stop, not to escape, but to look straight. They analyze what happened not to punish themselves, but to understand. They record mistakes honestly, including the most embarrassing thoughts, the weakest moments, not to torture themselves, but to prevent repetition. Some failures, handled correctly, become a foundation. One blown account can teach you risk management better than hundreds of books. One serious discipline break can end the illusion that you control everything. A painful fall can end the ego and open the humility necessary to survive long term. Traders don't mature through wins. Wins only reveal who you already are. Traders mature through how they stand up after failure, through how they repair cracks with awareness, with new discipline, with clearer rules. Those cracks are no longer something to be ashamed of. They become a supporting structure reminding you were wrong once and what you learned from it. There is a very real paradox. The most resilient traders are not the ones who never made mistakes. They are the ones who made many mistakes, but each mistake left a clear mark in awareness. They don't try to forget failure. They carry its lessons quietly, without showing off, but solid. Many traders quit not because they lost too much, but because they're exhausted from hiding themselves, hiding that they were wrong, hiding that they weren't disciplined enough, hiding that they weren't ready. That hiding consumes mental energy more than losses do, and eventually they have no strength left to continue. Mature traders are different. They accept they will always have weaknesses, but instead of hiding, they put those weaknesses under light. When a weakness is seen clearly, it loses its power. When a mistake is named correctly, it no longer controls you unconsciously. Trading is a very long journey. You can't go far if you keep carrying unprocessed cracks. Each time you dare to look straight at your failure, you become a little lighter. And only when you're light enough can you move forward without being pulled back by the past. Failure doesn't kill a trader, denial does. When you stop hiding and start facing, failure is no longer an enemy. It becomes a strict teacher, but a necessary one. And from there, you don't just trade better, you become a more grounded person in the face of uncertainty. Part 5. Discipline is not strength, it is a protective system. Many traders misunderstand discipline. They think discipline is something you must force every day, a hardness that makes you do the right thing even when it's uncomfortable, so they quickly burn out. Not because trading is too hard, but because they are using willpower to do the job of a system. Willpower costs energy. It weakens when you're tired, when you've lost, when life pressures hit from outside. If every trading decision requires willpower, you will soon fail. Not because you're weak, but because no one can maintain a constant state of forcing for long. Mature traders see discipline differently. To them, discipline is not strength to attack the market. It is a system to protect yourself from yourself in your weakest moments. When the system is clear enough, you don't need to argue with emotions. You just follow it. A good protective system doesn't demand you be strong every day. It's designed to function even when you're tired, unfocused, or coming off a losing streak. It reduces the number of decisions. It limits dangerous choices before emotions can get in. Many traders fail not because they don't know the right thing to do, but because they force themselves to make too many decisions in a single day. Whether to enter, how much to size, whether to hold longer. Each decision consumes mental energy. And when that energy runs out, the brain chooses the most familiar path, and often, that path is wrong. Stable traders do the opposite. They reduce the number of decisions to the lowest possible. They define in advance what is not allowed to happen, instead of hoping they'll be clear enough to avoid it under stress. When things are preset, emotion has less room to manipulate behavior. Real discipline is not never breaking rules. Real discipline is, when you break a rule, the system immediately makes you pay small and forces you to stop, so you don't get the chance to turn a small mistake into a big disaster. A good system doesn't need to be perfect. It only needs to be strict enough to protect you on your worst days. A common mistake: Traders try to build discipline by tightening harder every time they lose. More rules, more limits, more constraints, hoping that this time they won't repeat it. But without understanding the root, those rules only increase pressure, and higher pressure often leads to stronger rebellion. Mature traders don't tighten discipline. They make discipline easier to follow. They adjust their trading environment, trading time, and position size so that the right behavior becomes the most natural behavior. When the right behavior is the easiest behavior, you no longer have to fight yourself every day. A good protective system also includes knowing when you shouldn't trade. Some days you're not clear enough. Some periods life is too heavy. Trading through those times is not admirable effort. It's disrespecting your limits. Resilient traders understand. Resting at the right time is also part of discipline. Discipline doesn't make you cold or mechanical. It gives you space to become calm. When you know the system is protecting you, you stop being tense before each decision. You stop needing to prove something to the market. You do your part and accept the rest. At some point, mature traders realize discipline doesn't help them make more money quickly. It helps them survive long enough for real opportunities to appear. And in trading, the one who survives longest is often the last one standing. Discipline is not forcing yourself to endure. It is designing a game where you have fewer chances to hurt yourself. When you understand that, discipline stops being a burden. It becomes a safe shelter in a market that is always moving. Part 6. When doing nothing is the hardest thing in trading, there is a truth that is hard to accept in trading. Most traders only realize this after many years. Most of trading time is not entry time, not big wins, not painful losses. It is time when there is nothing to do. Long, empty stretches where the market is unclear, where there are no clean setups, where there's no strong emotion to cling to. And those empty stretches are exactly where many traders collapse. Traders often think they lose because they misread the market, but many lose because they can't tolerate silence. When there's no trade, they feel restless. When there's no action, they feel useless. When the screen is quiet, they start doubting themselves. And to escape that feeling, they create action, an unnecessary entry, a rush decision, a click just to feel they're still in the game. The human brain doesn't like boredom. It always seeks stimulation. In trading, every candle, every tiny fluctuation can become an excuse for the brain to convince itself something is happening. And when you can't tolerate silence, you start seeing opportunity where there is none. Inexperienced traders often confuse patience with passivity. They fear that if they don't enter, they're missing something. But mature traders understand. Not entering is also a decision. And many times, it is the best decision of the day. Doing nothing at the right time requires more strength than random action. Boredom in trading is not the enemy. It is a filter. It removes those who lack patience for the long road. Those who need constant feeling to feel valuable. Those who can't stand sitting still with their own thoughts. The market doesn't need you to be busy. It only needs you to be clear when real opportunity appears. Some traders enter very well on clear market days, but lose money on quiet days. Not because they lack skill, but because they can't endure waiting. They trade discipline for the feeling of action, and the price for that feeling often comes late but painfully. When you're new, silence makes you anxious. But when you've been in it long enough, you start to see silence as a privilege. It gives you space to observe, to recover, to keep your mind from being worn down by unnecessary decisions. Resilient traders learn to appreciate days when nothing happens, because they know each such day is a day they didn't damage their account and psychology. There is a very real paradox. The best traders often look like they're doing very little. They don't stare at screens all day. They don't trade nonstop. They don't need to feel they are in sync with the market. They wait, and they wait a long time. But when they act with clarity and calm. The ability to endure silence doesn't come from forcing yourself to be patient. It comes from changing how you view trading. When you no longer see trading as a source of emotion, you no longer need the market to constantly stimulate you. When you have a life that is full enough outside the screen, the market's silence stops being frightening. Many traders place their entire self-worth on trading results. So, when they don't trade, they feel worthless. This is a very dangerous trap. Trading is not where you go to find existence. It's just a skill. And that skill requires you to know when to use it and when to put it away. Mature traders don't try to fill silence. They let it exist. They understand that within those gaps, the mind has a chance to return to balance. And only when the mind is balanced can they make decisions not distorted by the need to do something. At some point, you realize the hardest part of trading is not enduring losses. It is enduring days when nothing happens. And when you get through that, many mistakes naturally disappear. Not because you're better, but because you no longer force yourself to act when it isn't necessary. Silence in trading is not a meaningless void. It is where discipline is tested, where the ego has no stage, where you learn how to be still with yourself. And if you can endure that silence long enough, trading starts to feel lighter. No rushing, no suffocation, only necessary decisions at the right time. Part 7. Time, Survival, and Long-Term Thinking. In the end, trading is not the story of those who move the fastest. It is the story of those who are still standing as time passes. Many traders enter the market wanting to win early, make money fast, and prove they are different. But the market doesn't care what you want. It cares about only one thing. Can you survive long enough or not? Time is the factor that traders most often underestimate. They think that if they are good enough, smart enough, and hardworking enough, results will come quickly. But in trading, being good does not help you move faster. Being good only helps you not get eliminated early, and that is a very big difference. Many people leave the market not because they lack ability, but because they burn out before that ability has time to show itself. They are exhausted by losses, exhausted by self-doubt, exhausted by constantly tensing themselves to fight emotions. And at some point, they no longer have the strength to continue. Mature traders see time differently. They don't ask, "How much did I make this month?" They ask a different question. Does my current way of trading allow me to still be here 1 year, 2 years, 5 years from now? If the answer is no, then even with short-term profits, they are willing to change. Survival in trading is not about avoiding all losses. Losses are part of the game. Survival means you don't let those losses destroy your psychological structure and your account. It means you still keep the ability to make clear decisions after difficult periods. It means you don't let a losing streak turn into a crack that can't be repaired. There is a very real paradox. The traders who last the longest are often not the ones who make the most in the shortest time. They are the ones who accept moving slowly, accept skipping many opportunities, accept the feeling of staying on the sidelines, and it is precisely that acceptance that helps them avoid being pulled into self-destructive spirals. When you start thinking long-term, the way you see each trade changes. A losing trade is no longer proof that you are incompetent. It is simply a small event in a very long sequence. A day without trading is no longer a wasted day. It can be a necessary day to preserve energy and clarity for the days ahead. Young traders often attach all emotion to short-term outcomes. Mature traders place trust in the process. They understand that if the process is healthy enough, results will eventually reflect it. And if results haven't arrived yet, the right move is not to panic, but to keep refining the process patiently. Going the long road in trading requires you to give up many things. Giving up the need to always be right. Giving up the need to be recognized. Giving up comparing yourself to others. Those things create unnecessary pressure and drain mental energy. When you let them go, trading becomes much lighter. At some stage, trading is no longer the center of your life. It becomes one part of a more balanced life. You no longer let every market move decide your mood. You trade when the opportunity fits, and you leave when there is nothing to do. No resentment, no clinging, no need to prove anything. That calmness doesn't come from winning enough. It comes from being in it long enough to understand. There are no shortcuts. Every attempt to go fast comes with a price, and that price is often you. Trading in the end doesn't teach you how to make money fast. It teaches you how not to destroy yourself in an environment full of uncertainty. It teaches you how to respect your limits, how to be patient through periods when nothing happens, and how to stand back up after stumbles without losing yourself. When you understand that, you no longer ask, "When will I succeed?" You focus on one thing. Am I moving in the right direction today? And if every day you only make sure you don't do anything that makes you worse, then over time, you will go much farther than those who are always trying to run fast. Trading is not a race. It is a long journey of endurance. And on that journey, the winner is not the best trader. It is the one who remains when everyone else has left.